You could probably do an entire 45-minute webinar just on the following question, whether or not an individual should incorporate or not. I'll spend a little bit of time. I'm sure you've heard many of the points that I'm going to raise in the next couple of slides before, but again, it's an important question and a question that comes up in discussions that I have with medical professionals. So on this slide, I've done the basic math for you. I'm comparing on the right-hand side what an individual's after-tax situation would be if he or she earned the money as self-employment income versus on the left-hand column what the after-tax implications would be if the individual incorporated. So if we take a look under the right column, if an individual earns professional income of $300,000, they're going to pay personal tax on that money, and they'd be left with a little bit more than $139,000 after they pay their personal tax. If the individual decided to incorporate and earn the same $300,000, they'd pay tax in the corporation at the low corporate tax rate of 15% in Ontario. They'd be left with $255,000 after paying corporate tax. But of course that doesn't tell the full story because they haven't taken any of that money out of their professional corporation. When they eventually take that money out of their professional corporation, they're going to pay a second level of tax. And when they pay that second level of tax, and that tax is paid personally, not uncoincidentally, they're going to be left with the exact same amounts as they would have had they earned all of that income as self-employment income and paid tax initially on it personally. So if the math is the same at the end of the day when the professional pulls his or her income out of the professional corporation, really, is there any point to incorporating? And the answer to that question is yeah. There are two main benefits to incorporating. I've included a third, which I'll touch on briefly. But the first benefit to incorporating is a possible income tax deferral. The second benefit of incorporating is a possible income tax splitting opportunity. And the third one I've put up there is the utilization of the capital gains exemption. And that's really only applicable to a health professional that can sell their practice down the road. Because if they are able to sell shares of their professional corporation, the first $830,000 of proceeds are generally tax exempt. Now, most physicians can't sell their practice. It doesn't have any value, but certainly that's not applicable to the dentists, which buy and sell practices all the time. There can be a significant tax deferral if an individual doesn't need all of their income for personal living purposes. In Ontario, tax rates on self-employment income can be taxed as high as 53.5% once an individual reaches the highest income tax bracket, which starts at $220,000. As opposed to professional income that is earned by a corporation. The first $500,000 of income that is earned by a professional corporation is taxed at a very low corporate tax rate of 15%. So as you can see, if an individual doesn't need all of their income for personal living purposes, they can incorporate their practice, have that professional corporation earn that professional income and pay tax on that income at a low corporate tax rate of 15%. This compares to the situation where if they didn't incorporate, they would have to pay tax on an annual basis on those marginal dollars at 53.5%. So to the extent that the individual is able to leave money in their professional corporation until they pull it out and pay that second level of tax, there's a tax deferral of almost 40%. The second benefit to incorporating stems from a potential income splitting opportunity. The Business Corporations Acts of the various provinces and territories allow for certain family members to be shareholders of the professional corporation. So if those family members are not in the same marginal tax bracket as the health professional would be if he or she earned all of that income as self-employment income, the practice could be incorporated. And then after the corporation pays tax on the professional income at the low corporate tax rates, those after corporate tax monies could be distributed to those other family members that are in lower income tax brackets. So the reason that this is a benefit is that if the individual earned all of their professional income as self-employment income, you could see that they're going to pay tax at tax rates, at least in Ontario, as high as 53.5%. If other family members are in lower income tax brackets than the highest marginal tax bracket, and the professional incorporates their practice, which then distributes the after corporate tax funds to other family members, those other family members are going to pay less tax than the individual would have had he or she not incorporated.